Good evening, everyone. Time for another silver update. This is the 1 hour gold chart provided by netdenia.com. You can click on the link below. Now, I've drawn a number of lines in here. I'm going to try to explain these lines. You can see that we're starting to form stair-step breakout formation. That's the type of thing that you see in bull markets, and we're going to try to figure out if this is a bottom here. Now, as I pointed out before, the indicator, the MACD, the moving average crossover divergence, this indicator, this is my favorite one to use. I pointed out before, this indicator is a trending indicator. Now, it's used to get sell signals in a bear market, buy signals in a bull market, and what I'm going to try to do here is use it as an indicator to potentially indicate a market turn. So let's start off with the first lines that I've drawn in here. The first one here, you can see I'm marking out the buy signals. You can see this blue line indicates a buy signal that was given, and there's another buy signal that was given here. Now you can see the trend, the downtrend on those buy signals. So there was a sell signal given before right here. That obviously was a very good signal. The market declined more than a number of times from there. Whereas this buy signal that was given right here, it completely failed. You can see that the market went flat from that signal and then dropped. We have the same thing with this buy signal here at this blue line. A tremendous buy signal was given, but you can see the market went sideways and then dropped. So that's an example of the sell signals, and here's a sell signal right at the beginning of this decline. That was a very good signal. The two sell signals, very valid. The two buy signals, very poor. That's the type of thing you see in a declining or bear market. Whereas in a bull market, you see buy signals that are valid and sell signals that are invalid. So you can see here now, after we've given this buy signal bottom here, and you can see that we're actually, the line is trending up into that buy signal. So this was a bigger signal. This was a signal that was almost as big, and then the third signal, not as big as either one of those, is actually the one that marks this rally. Then you can see we transition into this first sell signal that we get right here. We go sideways from there and dip and get a new buy signal. Now this sell signal turns out to be invalid, and this buy signal becomes valid. Again, we get another sell signal right here, and then the MACD works its way off as the market goes sideways. We get a breakout with a buy signal right there. So we're doing the same thing right now. We've had 2 to 3 valid buy signals now, 2 to 3 bad sell signals now. That's going to indicate a transition from this period that we're in with valid sells and invalid buys to a period with invalid sells and valid buys. If we continue up from here, you can see we're on the very last one here. The MACD, indicated by this trend line going down, is working its way off. You can see we're rounding down into a new breakdown on the MACD, but the price is stabilizing. If the price can stay near this point or do something like we did here, a sideways movement as this goes down and we break out again, then that's another indication that we've made a turn towards the bull market. Now, of course, the weekly is getting close to a cross. You can see we had that big uptick, and we're coming from that extremely oversold condition. Silver is similar. Silver is actually closer to crossing. It is not quite yet crossed, but it's getting very close. So very bullish signals on the silver and gold markets so far. We'll watch these closely to see if these continue. So we want to get over to some questions. Now this first question is going to be the main story I'm going to talk about, so we'll get to 2 other questions before we get to that. Panda China, this is from CoinTro, and he says, "Hi BGF, I finally have a question for you. You recently stated that buying Perth Mint Chinese Lunar Series coins might turn out to be a shrewd investment because in the future China will be where the money's at. Which leads to my question. Here in the West, especially so in the US, the middle class is shrinking alarmingly, whilst the top 1% become ever richer. Will China be any different in that regard when they overtake the US and become the economic superpower? Will they have a huge middle class with lots of disposable income, or will their top 1% likewise grab all the wealth? My hunch is that China and the rest of East Asia will have a healthy and prosperous middle class. That's my hunch as well. A lot of people have tried to explain why the middle class is disappearing in the United States. Obviously, I believe that it's the cause. The cause is the government. We've got basically freeloaders at the top. These are going to be the Wall Street banks and grifters who don't do any work. The Goldman Sachs, the J.P. Morgans, the derivative makers, and they just siphon off the wealth of the population. And then we've got the lower end. We've got all the people working for the government. I won't put them on the lower end. I'll say the people who are on benefits, some of which has been documented on Zero Hedge, can amount to as much as $60,000 more than what a person who's actually working makes. So the middle class is caught in a squeeze. And then, of course, in the middle, we have all the government workers that are making more than their middle class counterparts that are paying their wages. So all of these factors are working together to squeeze the middle class. Is that a coincidence? I don't think so. But I agree with you. I think that China does not have welfare on the lower end. And there's some indication to indicate that China is trying to crack down on corruption on the upper end. Certainly, China is one of the only places in the world where you get the death penalty for bankers. So I think you're right. I think that China understands that it's in their interest to have a healthy and prosperous middle class. China is encouraging their middle class to buy silver and gold. So looks like they're going the right way and we're going the wrong way. Next question. Are gold standards in Austrian economics good things? This is from Observator. And Brother John, this is a very interesting article. It challenged my thinking about the idea and origin of both the gold standard and Austrian economics. Your thoughts, please, on these points, your general conclusion about the article, which has another main theme. Here's the link. Now, this is basically a hit piece on G. Edward Griffin. You know, he's the author of A Creature from Jekyll Island. And I would say I certainly don't agree with this article. Now, this is the sort of populist argument against the gold standard. I have always said that I'm for a gold and silver standard, a bimetallic standard. I think that's the standard that's in the Constitution. I think they should be free floating. I think the market should determine their values relative to each other. I certainly don't believe that they should be pegged. Now, it is true that with the crime of 1873, the money powers tried to concentrate their power with the gold standard. That is true. That doesn't mean there's anything wrong with the gold standard, except for the fact that it's easy for a certain group to accumulate all the gold. That's why it's very important to also have a silver standard and have it determined by the free market. Now, if you go down to the bottom of this, most of this is just a hit piece on G. Edward Griffin. But you can see when we get down to the conclusion, we've cooperated with Austrian economics because they hate the Fed, abusive government, fractional reserve banking, inflation. But in the final analysis, these are all red herrings. The Fed is not the problem, but a symptom. The money power does not care about the Fed. It is ready to dump this vehicle as long as it controls its successor, and it will, because its successor will oversee a gold standard. Inflation is way overrated and absolutely the lesser evil compared to deflation. So this sounds like the Federal Reserve and the Keynesians that run everything. Deflation is the big bogeyman and inflation is the good guy. Of course, we know that exactly the opposite is the case. Deflation causes the little guy to have his money be worth more, whereas inflation chews up the value of his savings. And inflation, of course, can be used by the wealthy to get wealthier because they are the first ones in line from the money spigot, whereas the people who have to buy food and gas, they're the last in line. So we can see clearly where he's coming from. Deflation is good for creditors. Inflation is good for debtors. So I'm assuming that it's good to be a debtor, and it's good to let debtors get away scot-free. So I certainly don't agree. This is a Bill Still type of analysis, the type of populist, left-wing one that believes that if we just take the money, power, and give it to Congress, then everything will be okay. Of course, we know that that's not the case at all, that Congress is just going to print itself into a hole even faster. That's not the answer. The Federal Reserve is not the answer. The populist giving the power to Congress is not the answer. The answer is a free market, and gold and silver is money. And so let's get to the last question. And this is about this silver salvage story. Now, I didn't initially go too deeply into this, but as I began to dig, it became more interesting. So this is from MDZX111. Brother John, let me say I enjoy your videos. Please keep it up. After reading this story, I was curious how you see this affecting the silver market, since this is such a huge find. And this links over to this Fox News story about this record haul from the Gersapa. This is a ship that was sunk early in World War II, and we can see that it was coming from India. It was British India steam navigation going to London. It was sunk off the coast of Ireland. We can see here's the cargo, pig iron, tea, general cargo, and 200 tons of silver ingots and coins, 600,000 British pounds. Now, the first thing I would say is that they show in the video that they're claiming that they've, I think, twice now had one haul of 60 tons, another haul of 40 tons. So we're talking about 100 tons, and my guess is that's probably most of it. Probably the other half. We don't know what the breakdown is here with the silver ingots and coins. What they show are the silver bars in that video. The coins, my guess would be that the coins aren't going to add to the silver supply, simply because those coins will be sold. They're actually worth more as coins, and their numismatic value would be my guess. But I don't know. Now, as far as the silver ingots, the 100 tons, we're talking 32,000 ounces roughly. So we're talking about 3 million ounces. 3 million ounces of silver. This is going to be over the course of a couple of years, with a silver mining supply of roughly 750 million ounces. I don't really see this as a big impact. But apparently, and when we look at this story, apparently it they may be expecting it to have some kind of impact when we look at the language that he gives here. So that's very interesting. But before we do that, I wanted to look at the coins, because I became curious as to when the British demonetized their silver and what type of silver coins they were making at the time. And you can see there, this is a Wikipedia article, Coins of the Pound Sterling. In 1920, the silver content of all British coins was reduced from 92.5% to 50%, with a portion of the remainder consisting of manganese, which caused the coins to tarnish to a very dark color after they had been in circulation for a significant period. Silver was altogether eliminated in 1947, except for Mondi coinage, which returned to the pre-1920 92.5% silver composition. So we don't know how much of the tonnage of silver was actually made of the coins. We don't know if they were these coins, what type of coins they were. My guess is, though, they will be valued as numismatic coins. Very interesting that the British had already devalued by 1920. Of course, the Americans followed about 45 years later by devaluing down to roughly 50% for the period of 65 through 69, and then completely eliminating silver from the coinage. So the decline of the British Empire preceding the decline of the American Empire. All these things seem to go together. But let's look at the language of this. Now, I listened to it and something really jumped out at me. I'm not going to play you the video because I'm not going to worry about copyright stuff, and I'll talk about that a little bit later. But this language that really jumped out at me in this interview, and you have to understand that this is not properly parsed. It is the language of the interview, although there's some stuff missing. But what really jumped out at me was his comment about his working with the British government. So let's read this. And they put a silver bar on there. It says, this thing weighs about 80 pounds solid silver. Well, at current silver prices, it's about $20,000 for this bar. Do you split this, should we say, with the British government? And he answers, they get 80 and you get 20% of, that's right, current silver prices, the total worth about $76 million currently. Unbelievable. Your company, Mark, you go from site to site, as these sites, I guess, are identified by governments that hire you, defined, and then bring up what's inside the ship. Well, and then he answers, we actually have a proprietary database of 8,500, so we generally propose the projects to governments, which is a great model because by taking a risk, we're helping them refill their coffers at a time they need to be refilled. So you'll have to watch the video and watch him mention that. Now that's very interesting because this find is a silver find. There's no gold on this ship. And they knew this. We know that from this Gersapa cargo explanation. They knew what was on this ship. They had a database of 8,500 ships, and they went after the ship that had the silver, and because they need to refill their coffers. Well, what coffers? We know that the central banks don't stockpile silver. At least they don't claim that they do. So what coffers are they referring to? They're referring to coffers at the LBMA. Very, very interesting. So 2 points about this. One, they went specifically for a find that gave them silver. And 2, they're talking about some mysterious coffers that need to be refilled. So just more hints for you that silver is the big deal. Silver is the end game. Silver is the thing they don't have. And I think that silver is draining off of their exchanges. So back to the gold chart. Now, I mentioned that I didn't want to do the video, and that's because we've been having a lot of copyright potential issues. And so I haven't been doing a lot of posts or videos lately because I'm working on a membership site. We're going to very soon launch a membership site. This is for a number of reasons. One, of course, I've mentioned copyright. We're also using a large number of revenues just to support the site. So we're going to be moving to a membership platform. I'm not sure exactly how that's going to work out. We're probably going to release videos early on that, articles, perhaps podcasts, charts as well. Sort of going to be a membership blog. So look for that. We're going to be announcing that soon. And back to the gold chart, we may be forming a bottom. And with those stair steps that we've seen, it looks like we're beginning to change over from a declining, rolling over sell signal bear market to an increasing buy signal bull market. We're watching this latest consolidation here with the MACD going down and looking to see if we get another run up into new highs on the gold chart. If that's the case, then I think we can pretty much conclude that gold has finally put in the bottom. You can see that we're off of that low at just about 1180. We're all the way up to 1340. Of course, that's been met by nothing but silence. We know we had all of the bears out there bashing gold. Be very interesting to hear what they have to say if and when gold recovers 50% of this decline. You can see that the decline is from, we'll say, roughly 1800, we'll just say 1800 to 1200. So about a $600 decline. So about $300 of that is going to be a 50% recovery. We're talking about $1,500 on gold. Be very curious to see if we do that, if we get the same people in the media talking about how the gold bull market has resumed. Somehow I don't think that's going to be the case. And we'll talk to you next time.